After starting the year with momentum in the GTA housing market, it took a step back in the month of March as buyers remained cautious in increasingly competitive environments. The combination of low affordability and supply has created challenges for buyers, many of whom waiting on the sidelines in anticipation of either more listings and/or potentially lower interest rates in the months ahead. The timing of the unexpected interest rate cuts has recently been pushed out due to stronger than expected economic data. Hey there, I'm Matt Sloan, and I'm a realtor here in the Greater Toronto area. And if I could ask a huge favor, if you like this video, please subscribe and hit that button, as it would mean a lot as I'm working to grow my new YouTube channel. And if you like this video, please give it a thumbs up. Now, the March results were in, and I just want to kind of go over exactly like the demand indicators, the supply indicators, and the price indicators that will kind of show how the market has started off the first quarter of the year and where it might be headed. So we'll see some trends here as we go along. I just want to pull up a couple charts that will really paint a good picture and give you a little bit of insight on where the market is and where it could be going over these next few months here. So first, we're going to pull up these demand indicators. We're going to see total MLS sales for the month of March is still under the 10-year average. And leading through April here, we're still seeing a little bit of the same. It's picked up a little bit, but again, that seasonal change as we head into the spring, it was likely going to pick up a little bit. But as we see here, the 10-year average is just over 9,000 total sales for the month of March, and we're sitting at just over 6,500. So again, a little bit slower than the 10-year average to start off the year and the month of March in 2024. So now what I want to kind of point out as we pull up the next slide here is the direction of where things are going. So even though the sales are under the 10-year average, we're seeing it trend upwards with 11% increase from last quarter. So if we see at the end of the year last year, we were even under the 0% change when comparing the year before. But now we're up at 11.2% increase year over year, and from the end of the fourth quarter there in 2023. So the direction is going up. So we're starting to see more sales. How much it will pick up, time will tell. Again, it will depend a lot on the interest rates, what happened with that in months ahead. But we can see the trend, the direction it's going. And again, a little bit is due to some pent-up demand and a little bit of due to seasonal change here. So next up, we saw the demand. We'll pull up the supply indicators and see what the active listings are like. Are we getting inventory on the market? And sure enough, we're actually finally just over the 10-year average. So we've been below the 10-year average for active listings for the last 4 years here, as you can see. But we're finally creeping over that 10-year average point for the active listings. And that shows there is getting some inventory on the market. But one thing to note is that it depends on your property type. And a lot of these listings are actually coming from the condo sector. So if we pull up this next chart here, you'll see the months of supply. I know I've brought this up before, but the months of supply really give us a good indicator of how much inventory is really on the market and where we're at. Are we in a seller's market, a balanced market, or a buyer's market? And with 1.9 months of inventory that we're looking at right now, when we take all properties into consideration, we're actually trending very into a strong seller's market. So as I pull up this next slide, you'll kind of see the months of supply in regards to housing type. And when we look at the detached and semi-row townhome property types, we can see that they're at 1.5 months of inventory or less, and even less than a month of supply of inventory in some areas. And when we look at the condo market, we're sitting at still over 3 months of inventory. So in about a balanced market in the condo space. But again, we can see the difference of how much inventory is on the market if it's a condo compared to a detached and compared to a townhome or semi, which is really low on inventory. So with the demand and the supply indicators that we've looked at, we can kind of see where prices are headed with different property types. And you can see that, there hasn't been a huge change in the months, or sorry, in the average selling price, where we're sitting at just over 1.1 million for average sale price, which is still under last year's little spring hike. But again, we got to remember last year during the spring, we had fixed rates come down about 75 basis points. So they were sitting at just about 4.5% for a fixed interest rate. And we're not too far from that. So yes, we're just over 5% right now for the for interest rates, or fixed interest rate. But if it comes down another 50 basis points, say, we're going to be looking at prices to likely be more around where they were in the spring last year, as you can see. So again, there hasn't been too much price growth in terms of comparing to last year, but we can kind of see the direction it's been going in the last few months. And again, a little bit of that is mixed with a little bit of pent-up demand and also seasonal change. As we know, the December, January months are definitely slower in the year, and that's why we can see the bottom here, and we're kind of starting to trend upwards. And again, a lot will depend on interest rates, on which direction it will continue to go, whether it continues to stay flat, or if we see a little bit more of a spike. Going over to the average price for a detached, a semi-row, and a condo, we can kind of see the trend here, where the condo market is just kind of hanging around a flat average sale price. Not too much movement in the condo sector. Again, it's a pretty balanced market right now, and we've seen a bit of a spike in the semi-row townhome space, and then the detached are really starting to kind of separate itself again, from the semi-town and the condo town. If we do see the semi-row townhome continue to spike up here, then I think we might end up seeing a little bit of pressure on prices in the condo space. Again, I know there is a lot of inventory, but the gap will widen, and that will kind of leave people stuck to getting a condo for their property type, because we're going to have some affordability challenges once that semi-row townhome continues to creep over $1 million there. This is a cool chart here. It's the housing supply in different regions. So Halton region here, if you've got a semi-row or townhome in the Halton region, you're definitely in a good seller's market. We're below 1 month of inventory in the Halton region for a semi-row or townhome. And even if you're detached in the Halton region, we're sitting at about 1.3 months of inventory for the Halton region for a detached home. If we look over here, though, in the condo space, again, we can see how much inventory that we have. For example, in the Halton region, we have about 2.75 months of inventory for condos. So you can kind of really see what type of market you're in or looking to purchase in, and you can kind of get an idea of how competitive it will be in that space, depending on the months of inventory for that property type and the region that you're in. So the March results were a good reminder of the affordability challenges that households are facing in today's market, reinforcing the view that the housing recovery will take time and be bumpy along the way, depending on, again, where you're located. Optimism regarding the interest rate cuts began to fade somewhat during the quarter, as the economic data showed better than expected strength, largely fueled by record population growth, along with stubbornly elevated levels of inflation in certain core categories such as food and shelter. So until rates begin to decline, the market will likely continue to behave as it has during the first 3 months of the year, with sales below normal, supply a little lower, and prices essentially trending sideways for most areas and home types. Keep an eye and ear out, though, as we do move closer to these potential interest rate cuts down the line, as it could get some buyers off the sidelines. So once again, thanks for tuning into the video. And if you found this helpful, don't forget to give it a thumbs up and hit that subscribe button for more, and to stay up to date with the GTA market conditions. See you in the next one.